Sanibonani. Hi everyone, my name is Sebenzile Dlamini. This presentation is on business and company basics. I have 11 slides and 8 topics. I will divide the presentation into two. The first part will cover preparing to learn, a simple definition of a business, entrepreneurship culture, business and wealth creation. The second part will cover features of a company and your motivation for starting this journey. First things first, I'd like to advise you to find a quiet place and minimize interactions with other people during this presentation. Please get a notepad and a pen or a paper so that you can write some of the points that I will mention, which are not written in the slides. Albert Einstein once said, "Paper is to write things down that we need to remember. Our brains are used to think. So please free your mind so that you can create more." This simple definition of a business is based on information that I have gathered over the years while interacting with entrepreneurs and innovators. It is important to identify a problem first when coming up with a business idea. The problem could be anything that is experienced by consumers, so that when you solve it, you end up with a business to consumer or B2C sales strategy. The problem could also be anything that is experienced by other businesses, so that when you solve it, you end up with a business to business or B2B sales strategy. Whenever there's a problem, there is an opportunity to solve that problem. So a business is where the interface between the problem and an opportunity occurs and results in, one, the organization of resources. Resources could be one of the following four things or a combination of them. The first one is manpower. You need human capital. You also need machinery. The third one is methods. You need methods for creating the products or services. You also need money. Oftentimes it is not a lot at the beginning of a small and micro enterprise, but you do need a little bit of funds. Once you organize those resources and you start producing the goods or services, the expectation is that the business should generate some sales income. I usually say that one of the key skills that any person who wishes to start a business should acquire or develop is an ability to sell. If you are making products or services, but no one is willing to pay for them, it means that you do not have a business yet. That could be a sign that either you are not selling the products, or the quality of the product or service is questionable, or the problem has not been clearly understood, especially from the perspective of the buyer or the customer. It is always important to aim to sell your products or services to businesses or consumers that are not within your own household. You have to develop the courage to talk to strangers and sell your products and services. As you sell the product or service, the main goal should be to realize business profits. If the business does not make profit, it will not survive for a long period of time. You will not have money to reinvest for expansion in the business, and you will not get the motivation because you will not be able to get any dividend from the business. Therefore, it is every business owner's goal to realize a profit at the end of the year. At least at the end of the year, because usually when you are starting, you don't realize the profits on a monthly basis, but you should aim to achieve profits at the end of the year. I know that many small and medium enterprises do not realize profits for a longer period of time because they start off with very little capital. That is absolutely okay. But what can help is to monitor the sales income. If the sales income is increasing, then it is a sign that you have potential to create profits in the longer term. The fourth thing that is important when starting a business is to ensure that you make an impact through the business. The business must make an impact in the social or economic or environmental sphere. Otherwise, it will not be sustainable. Now, I would like to discuss entrepreneurship culture because this has an influence on the interest or motivation of a majority of people in undertaking business activities. Entrepreneurship culture is developed over a long period of time. It is influenced by two main factors. The first one relates to external or environmental matters. The second one relates to personal attributes. Under environmental factors, there are policies that influence entrepreneurship culture. Such policies include a policy on entrepreneurship and innovation, a policy on procurement, a policy on small and medium enterprises, policies on funding mechanisms that are available to SMEs and startups. The second one is curriculum. Learners in schools and universities are exposed to entrepreneurship concepts and practices. The extent to which the curriculum motivates learners to start business also has an influence on the entrepreneurship culture. The third element is the number and visibility of entrepreneurship symbols. It is important in every society to have businessmen and businesswomen that started off with nothing, or those that inherited businesses but grew the businesses and turned them into companies, not just SMEs, but corporates or even conglomerates. When young people see these symbols, they become inspired and they are more willing to start new businesses. D, the information that is available to the public about what it takes to start a business in a particular ecosystem or environment also influences the appetite of members of the society to start businesses. So it is important to make information available. Right now in Eswatini, information is available online. So I would like to encourage everyone to access information from the government website, from institutions like the Royal Science and Technology Park, the Youth Enterprise Revolving Fund, and many other institutions. The fifth factor is the openness of markets. When markets are liberalized, they have many players or firms. So that encourages people to start businesses in the markets because they can see that anybody can enter the market and succeed if they manage the business well. The openness of markets is also connected with the overall performance of an economy. And when an economy is performing well, usually a lot of businesses that are started succeed because when an economy performs well, it shows that there is demand. The demand could be from the domestic population or from the export market. Number 6 is business finance. It is important to note that business requires finance, but it does not necessarily mean that if you cannot access external finance, you cannot start a business. I will talk about this again when we discuss the personal attributes. In Eswatini, we have several institutions that offer business finance. We have the Youth Enterprise Revolving Fund. We have Tinkundla Regional Development Fund. We have institutions like the Royal Science and Technology Park, JA Eswatini, and other organizations, including civil society organizations or NGOs, that support startups with funds that they get from government or the development partners. Under personal attributes, the first point that I listed here is attitude, mindset, beliefs. When a person believes that he or she can start anything and make it successful, that person is more likely to venture into entrepreneurship than a person that does not believe he or she could start anything that could succeed. With mindset, I would like to mention that entrepreneurs that start and succeed are not driven by short-term goals to make money in the short term, a lot of money in the short term, and show off. The mindset is related to financial literacy. If you understand that there is a time to invest and the time to reap, you are more likely to start a business for the right reason, manage it well, and succeed. Skills are important. You need to have basic skills to be able to create the product or service. If you don't have the basic skills, you should have money so that you can hire the qualified personnel and pay them wages or salaries. If you don't have that, you could cover the skills gap by enrolling and learning how to develop that particular product or service. You could also understudy other people or watch videos online. The third personal attribute is time management and a work ethic. Time is a resource. We all come into this world with absolutely nothing except our brain and time. If you are disciplined, you can create a lot of things without spending much money, just by managing your time well. If you work hard and manage time well, you are likely to succeed in whatever you do. The fourth point is income or savings. When you start any kind of business, even if it is a small business involving making and selling fat cakes or emafet, you need a bit of money to buy the ingredients. So it is important to raise some income and savings. If you are a student, you could decide to start a side hustle and sell some products or services to other students or in your community, and use that money to finance your business idea. Number 5 is social capital. Social capital is networks, people that are connected to you or people that you are connected to. You do not necessarily have to have networks of wealthy people or industry experts, but you can start developing a culture of creating a good social capital, which will involve even your friends. If you select your friends carefully, you will find that your friends bring benefits to you, and you also give some benefits to them. Your friendship is not simply based on entertainment. You share ideas, and they can help you whenever you need an extra hand, and you can do likewise. Sometimes your social capital can also give you access to networks. There are people that you can access who would be in a position to create opportunities for you because of their own networks and the types of businesses or professional services that they provide. Other times, your social networks can help you with funding. If your own income or savings is not adequate to start up or to finance the business at a later stage, your social networks can contribute to the funding of the company. Number 6 is patience. Business is not a short game. Business is not easy, but it is quite fulfilling. So when you start a business, you must be prepared to apply everything you learn and learn more and really understand the industry, the customers, the people that work for you, your suppliers, and the external environment over a long period of time, because success comes after some time. It is not immediate. You are likely to find it a lonely experience if your friends are not interested in business, but you need to persevere. In this slide, I would like to draw your attention to why I believe business is a superior method for creating wealth than being employed. When you are employed by somebody, you devote about 8 hours of your time a day to the employer for one type of income, and that is a salary. But a business can be started by anyone, regardless of background, and wealth creation can be attained by anyone, regardless of background. And that is because of 2 sources of income that you can get in a business. As a founder or owner of the business, you have a right to draw a salary. as compensation for the time, the energy, and the intellectual capacity that you channel to the business. But I know that many micro and small enterprises do not grow fast enough and generate adequate sales income at the early stages to justify a salary for the founder or owner. It is common for micro and small enterprises to run businesses that are not paying them salaries. Usually you find that the business owner utilizes all of the funds to grow the business at the early stages. But it is necessary to make sure that there is an arrangement to allocate a salary to the founder or owner at some stage of the business, because if there is no compensation at all, you might be tempted to start drawing funds and not accounting for them. The second source of income, which is the most superior, is a dividend from profit. So a dividend is a share or percentage of the profit that is allocated to the shareholders or owners of the business at the end of the year. When a company makes profit and declares a dividend to the owners or shareholders, the owners or shareholders can use that money to invest in tangible assets such as land or property, which will generate rental income, or intangible assets such as government bonds or stocks, which will generate income in the future. So wealthy people become wealthy by investing in tangible and intangible assets that generate income in the future. That is why some wealthy people at some stage of their lives do not need an 8-to-5 job, because they can earn a lot of income without necessarily having a day-to-day job. They earn the income from the tangible and intangible assets. So wealth, or your net worth as a business owner, will be all of your assets, the value of all of your assets minus all of your liabilities. So if you run a business that generates good profits at the end of each year, you can then declare a dividend and use that dividend to invest so that you can have income that flows into your pool of funds on a long-term basis. As that happens, the value of your assets will grow and exceed any liabilities that you have. That is why the wealthy people create a lot of wealth. Here I have provided an example of an income or profit and loss forecast for a small business in Eswatini. This data does not belong to any company. It is just an example. Any business sells either goods or services or both. So it records sales income at the top. Let us look at year one. It records sales income amounting to 501,600. The company spends money on ingredients or inputs. These are called cost of goods sold or direct costs related to the production of the goods or services. In this case, the cost of goods sold amount to 258,150 emalangeni. In every business, it is important to measure the gross profit. In this case, the gross profit is the difference between sales income and the cost of goods sold. So you subtract this figure here from the one above it to get the gross profit. The gross profit gives an indication as to whether the business can cover its operating expenses below, or the cost of goods sold are too high relative to the sales income such that the business cannot cover the expenses below. Any business has expenses. Operating expenses cover things like salaries, rent, utilities such as water and electricity, telecommunication services such as internet and communication, transport and courier services, supplies, payment for consultancy services, and so on and so forth. So here I did not list all of those things. I came up with the total operating expenses as 217,738 emalangeni. Then the next major indicator to calculate is operating profit. I hope you can see that you start with the gross profit and then you calculate operating profit. Operating profit is the difference between the gross profit and the total operating expenses. So in this case, the operating profit is 25,712 emalangeni. This particular business did not borrow money from anyone or any institution. The founders used their own savings as equity in the business. So they are not repaying any loan. That's why the interest on loan is 0. But they bought machinery to produce the products. So the machinery depreciates every year, and the amount here is 10,000 emalangeni. So when you add these 3 things, you are supposed to get a total for interest, depreciation, taxes, and amortization. And the total is 10,000 emalangeni because the only item that required a deduction is depreciation. But please note that you don't pay for depreciation. It's an accounting figure that is calculated based on the type of goods that the company owns. Then you are expected to calculate the net profit or loss before tax. In this case, you say operating profit, which is this amount here, minus 10,000 emalangeni. You get 15,712 emalangeni. Once you get this amount, if you are a sound businessman who wants to grow the business, you do not utilize this money. You then calculate how much money is due to the tax authority. So in this case, we are assuming that when you calculate, you find that the tax that is due is 4,242 emalangeni and 24 cents. Then the net profit that you end up with in the books is 11,469 and 76 cents in year one. This is the profit that belongs to the company because you have already paid the portion that belongs to the tax authority. Let us look at year two now. So in year two, we can see that the sales increased by close to 150%, close to 100%, sorry. They increased to 1.1 million. So it means that this company has increased the units of products or the number of consumers of the services. In so doing, it is expected that the cost of goods sold increased. So you can see here it's 596,560 emalangeni, which is bigger than the cost of goods sold in the first year. So the company then calculates the gross profit, and it is almost double here again. You apply the same method up to the end. In the second year, the profit is 185,938 malangeni and 30 cents. The net profit after tax is the amount of money that the business owner or shareholder needs to plan for. There are three options. The first one is investing all of the money in the business to expand it. The second one is reserving all of the money so that you can save for a rainy day. For example, there could be situations in the future that are not favorable to the business, and you do not want to apply for a loan to finance the business during those difficult times. So you can reserve some of your profits for such instances in the future. The third one is declaring a percentage as a dividend. So it is advisable to look at the total, the net profit after tax, and divide it so that you can have reserves for a rainy day. You can reinvest some of the money in the business and declare a percentage as a dividend to the owner or shareholder. So this is how a business owner or shareholder creates wealth through a business. It is not by utilizing the money that comes in as sales income. That is why it's important for every business to have proper bookkeeping. At this stage, I would like to talk about a company and the role of the owner or shareholder. A shareholder owns shares in the business. If there is one shareholder, the shareholder will own 100% of the shares. So the percentage of the profit that is declared as a dividend will go to the shareholder or will be allocated to the one shareholder. If there are several shareholders, the dividend will be divided among the shareholders. Shareholders of a business should have meetings and keep records they should keep minutes of the meetings. Shareholders of a business have voting rights. When there is one shareholder, there is no need to vote because you take all of the decisions for the business. But if there are several shareholders in the business, you will need to plan the allocation of the shares very well. You do not want to have a situation where you have two shareholders and each shareholder has 50%, or both shareholders have equal shareholding and the same voting rights, because it means that when there's a deadlock between the shareholders, you will not be able to resolve that. So it is always advisable to have one shareholder who has more shares or more voting rights than the others, so that it can be easy for you to take decisions. And you need to consider the fact that you do not choose shareholders on the basis of friendship or family relationships. You choose shareholders based on how much money they are bringing to the business, or how much strategic relationships or contracts they are bringing to the business, or to what extent their expertise influences the quality of the product. The role of the shareholder is to determine the products and or services of a business, the strategy, business plan, policies, and other things. Shareholders also determine how much funding is required for the business and where this funding will be sourced. Shareholders decide when to sell shares. They decide when to sell shares to or transfer shares from one shareholder to another, or to sell shares to people that were not present when the company was founded, or to even transfer shares to family members. Shareholders also decide on the percentage of the profit that will be declared as a dividend. When there are several shareholders, it is important to develop and sign a shareholders agreement immediately, so that all of the above things can be clearly set out. For example, it becomes important to define very early what will happen when the business runs out of cash. Are all of the shareholders willing to contribute towards that? What will happen when one shareholder dies? What will happen when you wish to change the products or services or mission of the company? And what will happen when the company is under, litigation, for example, because some people might not want to be associated with a company that is facing litigation. Shareholders do not necessarily have to be employees of the company. A shareholder can start a company and then hire executive staff. There is a difference between a shareholder and an employee. But I know that in Eswatini, it is quite common to have one shareholder who also becomes the director or employee of the company. But generally, shareholders appoint the executive staff. The main member of the executive staff is the CEO or director. I will discuss that in the next slide. Shareholders also have to make sure that the executive staff reports accurate finances to shareholders. That is why shareholders appoint external auditors who will assess all of the financial reports that are produced by executive staff. In this slide, I would like to show you the difference between shareholders and directors in a structure of an organization. The shareholders are at the top because they own the company. If there is more than one shareholder, the shareholders will constitute themselves as board of directors so that they can assess the reports and performance of the director. The shareholders also give direction, strategic direction to the director, who is the manager in the company. The director or manager is responsible for the daily running of the company. The director also acts in the interests of the shareholders as a whole. So if there are several shareholders, the director is not expected to pursue the interests of one shareholder. The director is accountable to all of the shareholders and protects their interests. I have already said that in Eswatini, it is common for a shareholder to be a director of a company, but it is not necessary. It is not always necessary. The director also manages the finances and other resources of the company. He or she ensures compliance with business laws and other laws. He or she hires lower management and operational staff. The director receives a fixed monthly salary. You will recall that I said the shareholder also receives a dividend. A director does not necessarily receive a dividend unless they are a shareholder of the company. The director also prepares and presents operational and financial reports to the shareholders. Please think about this carefully. I have observed that when people start businesses, they prefer to assign themselves the role of a CEO or MD or GM or director of the company. Then when we ask for the reports, which should come from the functions that are listed here, sometimes the response is, I just like to develop this product. I don't like preparing books. I don't like reading about compliance matters, or I don't like to manage people. I hope that you can see now that the role of a CEO or GM or director in a company is quite important. So if you want to focus on the technical development of the product, I would advise that you look for another role and get another person to perform the duties of a director. In this slide, I am presenting some features of a proprietary limited company and compliance matters. There are different types of companies that an entrepreneur can register in accordance with the Companies Act of the country. But I chose this company because it is most suitable for many enterprises that we support. When you incorporate a company, you receive a certificate of incorporation accompanied by an articles of association and memorandum of association. These documents confirm the ownership of the company. So they will mention the names of the owners and how much shares they have. A company like this one separates the legal identity of the business from the person or the people that have formed the company. So the financial records that I showed you earlier are purely for the business. They are not for the shareholder or the director of the company. That means that if the company owes any person or company and they cannot pay that person or company, that person or company has to take the company to court, not the director or the shareholder. So that is why it is beneficial to incorporate a company when you start a business. After 21 days of incorporating the company, you are supposed to complete Form J, which confirms the appointment of director. I mentioned that it is quite common in Eswatini to have a shareholder in the articles and memorandum who also appears as director. That is mostly because in most cases, we start the companies with very little startup capital that we cannot afford to hire an experienced person to be a director of the company. But as the company grows, you can relinquish that position and hire a director so that you can remain a shareholder and focus on the strategic matters of the business. Once you get Form J, you can apply for a trading license. A trading license is issued on the basis of the type of product or service that you wish to sell. And it becomes necessary for the subsequent steps. When you register a company, the expectation from government is that you will run a business that will comply with all of the laws of the country, including tax laws. So it is important to apply for a tax identity number for the directors of the company, as well as a tax identity number for the company. Because at the end of the year, the directors of the company are supposed to declare how much they earned and paid as tax, and the company is expected to declare how much it earned and how much it should pay as tax. If you will employ people, or even if it's just you, the director alone, and you will be drawing a salary from the company, you have to register for pay as you earn with the tax authority. It is illegal to draw a salary or to pay a salary to any person before registering the company for pay as you earn, even if the salary is below the taxable threshold for individual income tax. When the company generates a turnover that is sizable, like the one in the example that I presented earlier, it is advisable to register for VAT immediately so that you do not find that at a later stage when the company is assessed by the tax authority, there is some VAT that should have been paid to the tax authority. Every business should have a business account so that you can separate your personal funds from the business funds. To open a business account, they will require you to produce all of the documents that I have listed above. And having a business bank account is quite advisable because it shows that you are serious about creating an enterprise that will be credible. So I would encourage all of you to open business bank accounts. At the end of a year, a business that is incorporated or registered is expected to complete Form C and submit it to the Ministry of Commerce. Form C confirms the shareholder arrangement, or it simply confirms whether the shareholders that were registered at the beginning or incorporation of the company are still the same, or there are additional shareholders or others have exited from the company. Every business in the country is expected to register for Provident Fund so that the company can pay Provident Fund for the employees. And it is expected by law to have a labor registration certificate when you are employing people. This is the very last slide. Here, I would like to encourage you to look deep within yourself and ask yourself again this question: why do I want to start and run a business? If the answer to this question is related to the impact that you want to make, self-sustenance, and motivation to do something different, you are more likely to start and succeed. But if you start and fail, you are more likely to gain courage and start another business again. So I would like you to ask yourself the question and then start your business venture with the right kind of social network, or even if you don't have the right kind of social network, through the training courses that you will have access to and advisors that you will have access to, you will be able to avoid many of the mistakes that a lot of people commit when they start businesses. It is important to be always hungry to learn. Business is a system, and it is a sophisticated system. So you cannot get all of the information that will be helpful to you in one training workshop. You have to learn continuously and surround yourself with people that will motivate you over a long period of time. This is the end of the presentation. I would like to encourage you to type your questions in the comments section. I will answer all of your questions as long as they are related to this training. I think that we will help each other and create a strong network when we type the questions, because other people will be able to see the responses that I will be providing to the same questions. Thank you for your time.